25 million equity, 75 in debt. With that 100 million, we're going to be deploying it into a company that's already doing 10 million in top line. And with the build out of more farms, more facilities, a roaster and a distillery, we're anticipating revenues to grow from just over 10 million last year to north of 250 million in 2026.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. Today, my guest is Josh Ziegelbaum. Josh is from the Legacy Group, and he's going to tell us about an interesting investment idea in coffee, and not just in any kind of coffee or coffee investment, but one that is based in Colombia. Josh, welcome to the show.
Thanks for having me on the show. It's great to be here, and looking forward to hopefully adding value to you and the audience.
Absolutely. You know, every time somebody has an idea about an alternative investment, I'm all ears. And Josh, I believe you reached out to me a few weeks ago and we put this interview on the calendar. And it seems like you have a really interesting investment idea that you're working on right now. And this isn't even an idea. This is a legit company now. I believe you guys are in your Series C funding round. You guys are now seeking basically more investment to grow quickly, grow rapidly. So why don't we jump right into it? Tell us more, what is the coffee investment idea you guys have in Colombia?
Yeah, let's dive into that. And then very briefly, I'll give a quick background on myself and the firm before we jump in, just as a means of context. So I'm the investor relations director at Legacy Group. We're a private equity asset manager with a strict focus on high quality businesses in Latin America. And we bring those investment opportunities to investors on a global basis, primarily made up of US high net worth individuals, but we have investors from all over the world. And we raise capital directly into green coffee companies. So rather than a structure with 10, 20 different portfolio companies, and an investor doesn't fully understand what they're getting in an early stage basket of companies, we are giving direct access to Green Coffee Company, which is our flagship portfolio company and Colombia's #1 largest coffee producer. So through a US investment structure, we issue common equity to our 400 investors and growing. We've raised over $50 million of investment capital in the last 5 years since we initiated the first offering, which was the seed funding round back in 2018. And we've really grown substantially over time. You mentioned the idea back in 2017, and what we had the idea, the partners at Legacy Group, the founding partner, Cole Shepard, and board member of Green Coffee Company, thought that the Colombian coffee industry was ripe for disruption, that there was a lack of foreign investment, a lot of antiquated farming practices, decentralization in terms of processing and land ownership, just decades of landholders that have been passing down farms that are using very out-of-date practices and really not producing the product in a commercial manner that you might find in other more developed parts of the world. It's all hand-picked, at least in the region where we operate in Colombia, which is Salgar. It's in the Department of Antioquia, which is the same department or state as Medellin. That's where the two partners at Legacy Group and GCC board members live and work out of. Myself, I'm in South Florida, but I go down every few months and visit the operations. As of the time of this recording, I was there a couple of weeks ago. We brought some investors down, and it's really incredible what we're doing through Green Coffee Company. I mean, we deploy over 500 people in the primary harvest. We did top line revenue in excess of $10 million in 2022, up from 1.3 million in 2021. On that 10 million of revenue last year, we did over $1 million in net income. This will all be disclosed and detailed formally in our upcoming investor update, which we expect in early Q2. But some really incredible things. I mean, essentially, we focus on production at scale. So we buy land from families that have owned it for generations. In many cases, we negotiate those transactions over a long time, so often certain years in certain instances. But we become the go-to buyer or the only buyer in the market for the types of land holdings we go after. And we've grown to over 7,000 acres of land holdings and 8 million coffee trees planted as of our most recent data. pushing up to almost 30 individual farm groups, each of those broken down into even more. And it just expands over acres and acres of mountains in the hills of Colombia. It's a wonderful thing to see on the ground there. And we're doing things in a sustainable manner. So not only are we producing coffee in Colombia, high quality coffee, we're doing it with formal employment practices, which are not done in the region. So we pay people into bank accounts, we give health insurance, pensions, a lot of things that we know and expect in the United States, but don't exist in the market there in Colombian agriculture. So we're really disrupting that, changing the way in which coffee is produced. And from a technological standpoint, bringing in technologies from developed Europe and other parts of the world, combining them. We have a fully automated wet mill, which is, it's really wondrous. It's capable of, we have two of them capable of doing 400,000 kilograms of coffee cherry per day in production. And then this is really the first pillar of the business only, which is coffee production or farming production and sale. And today it's green coffee, hence the name of the company, which is taken all the way through the production line, but it's dried, but it's not roasted at the end. So we sell it at scale B2B, containers of green coffee, both in and out of Colombia to our global clients. But part of the business plan in this Series C round will be to go further down the value chain. And what I mean by that is getting into roasted coffee. So part of the proceeds of this funding round that we're in now is to build a US-based roaster where we could take all of these containers of coffee that we're selling in green form, roast them in our own proprietary roaster, then sell wholesale B2B roasted coffee at higher margins. And then beyond that, at the wet mills, there's a tremendous amount of waste created from the coffee cherry. So coffee is a fruit, and more than half of it is discarded as part of the production process. But it's high in sugars and antioxidants and other things. And we're developing a distillery on site to break it down into ethanol and then vodka and sell vodka at scale as another line of business in addition to coffee sales. So that's really the overall plan as we grow the company from 10 million in revenue today up to an expected 266 million in top line revenue in 2026. At which point, our goal is to either sell or IPO the company, hence the higher return profile that investors might see in more traditional investment offerings.
Amazing. Amazing. Thanks for that intro, Josh. I think you've said a whole bunch of stuff there, and I feel like I have 5 follow-on questions ready to go. So let's go with the first one. So it sounds like this company owns hard assets. So it owns the land, it owns the farms, it owns the processing facilities. So when you are taking on more investor money, you're primarily going to use that investor money to acquire more land, more processing facilities, and eventually get into the roasting as well.
That is correct. It's a heavy balance sheet business in which investor capital comes in. We buy farmland at scale, often well below market prices, which we negotiate with which are economies of scale that we have down there. And we're building up a balance sheet of acreage of farmland. There's fincas on those farms. There's homes and properties, of course, and real estate on the balance sheet. And then the wet mills that we own, we have 2 of them, and we're building additional facilities with the proceeds of the funding round. So we want to expand outside of the region where we're in currently and build a whole nother operating nexus, more wet mills, a dry mill to process all the cherries, more farmland. We want to grow up to 15,000 acres by year end this year. And that's right, we're also going to be deploying for a US-based roaster. So a lot of our investors, as you could probably guess, are real estate investors, business owners, and people that are comfortable with a real asset type investment.
That's amazing. So it sounds like you are doubling the number of acres, right? From 7,000 to about 15 roughly by the end of the year. That's pretty amazing.
That's right.
That's ambitious. Yeah. So Josh, it sounds like this is Series C, right? So a few years ago, you had Series A. You convinced some investors to invest with the company. Then the company grew. You had Series B. You worked with some investors to invest more money, and it's going really well. It's growing fast. Now you're into Series C. What are you guys valued at right now?
We were pre-money going into this Series C round. We launched the round in September of 2022. Pre-money valuation was $67.5 million. So after the 25 million in equity that we're raising here in this round, just under $100 million post-money valuation on the Series C round.
Got it. And when does the Series C round close?
Once fully funded by our investors. So once fully subscribed and funded, we broke it down into 3 equal tranches. So it's a $25 million raise, but we did it in 3 stages of 8.33. So we're going in, at the time of this recording, at the end of February, we're going into the final tranche. So we have just under 10 million remaining to be funded, but there's still some availability based on the rate in which we've been going at. I'd expect 2 to 3 months from now, or around April of 2023, that I expect it to close at the rate in which we've been bringing in commitments.
And with these type of investments, correct me if I'm wrong, but there's really, the investment itself is not very liquid. So once someone invests with you, they really need to wait until some kind of a liquidity event in the future. I believe you mentioned that you plan on either going IPO or sell it to another, maybe larger international firm. I believe you mentioned 2026, 2027. I know that you can't promise returns and you never should, but what kind of returns are you estimating or expecting? Because it sounds like you're growing at a good clip.
We are most certainly growing, and while it's a very exciting early stage company, it comes at a cost of liquidity, as you alluded to. So this is most definitely a private equity investment in a company that is not publicly traded, and the shares, while they're securities and it's common equity in a U.S. business, it's not liquid. So the investment returns, as you could probably guess, are very high on the forecast range, right? Taking a company from private to public, we're forecasting a 64% IRR for our limited partner investors through 2020.
Whoa, say that again. Say that again. How many?
64% annual IRR.
64. Oh my word.
And it's an 11x forecasted net equity multiple on investment. That's what that works out to through 2026.
That's incredible. Wow.
Important
that is
to note.
Absolutely incredible.
Thank you. Yeah, and it's important to note, open to accredited investors only. We have a minimum investment of $100,000 while we're on the topic of projected returns.
And if you don't mind me asking, Josh, when you come up with that kind of an evaluation, let's say 3-4 years from now, what are you basing on, or how are you arriving at that valuation?
Yeah, let me explain to you how we back into that. And of course, our materials are available to be shared with anyone who wants to reach out to us. I'll give contact details at the end. And in those, you'll see our pro forma and our investment summary, which breaks down where we expect revenue to grow from today until 2026, and then the expected valuation and net returns within that. But let me summarize it for all the listeners here on the podcast. So I mentioned just over 10 million in top line revenue that we did in 2022. With the use of proceeds from this $25 million equity raise, we're doing it concurrently with a round of debt financing. So the total Series C round is $100 million, 25 million equity, 75 in debt. With that 100 million, we're going to be deploying it into a company that's already doing 10 million in top line. And with the build out of more farms, more facilities, a roaster and a distillery, we're anticipating revenues to grow from just over 10 million last year to north of 250 million in 2026. In our financial model, we're forecasting a $60 million net income on that 266 million in top line in 2026. So what we did was we looked at some comparable companies in the space. We noticed a lot were unprofitable that were going public or at very high price earnings multiple ratios. So instead, we looked at the historical average of the S&P 500, which is 20 times earnings. That's really more so reserved for larger cap companies, of course. But for the purpose of the model, we took the 60 million in forecasted net income in 2026, and we applied a 20 multiple to that, which backs us into a $1.2 billion valuation, as opposed to the just under 100 million that we are as of the post money in this round. And then netting out everything is how we get into that IRR of 64% and the 11x net return on invested capital.
Incredible. Yeah, that's right. And I think if you're growing quickly and there's still more room to grow in Colombia, and there's more room to grow with the roasting in North America, et cetera, you could, in theory, have a higher valuation than just 20 times earnings, in theory. But I mean, let's not get too crazy. I think 64% is crazy enough, but that's pretty wild.
I couldn't agree with you more. For the purpose of the model, we're going to keep it at 20 times earnings. But I do agree with you and the market data shows as well that with smaller cap companies, if you look at the Russell 2000 just as a basket, it trades substantially higher than the S&P. So, and often companies that are going IPO, I mean, I know the market climate, the public market climate has changed quite a bit in the last year, but it's not unheard of to see PEs north of 100 on first days of trading in certain cases. And we don't want to get carried away with our model or anything, but I do agree with you that it's conservative in the sense of the multiple that we're applying if we're able to achieve the top and bottom line numbers in our financial model.
Yeah, and Josh, if one of your potential exits is to go IPO in America, does that mean that the investment vehicle is an American company?
It is. So
Okay.
we issue common equity, and for this particular opportunity, Green Coffee Company Holdings, LLC, which is a Delaware LLC. So it's a U.S. investment structure. We have operating subsidiaries in Colombia that own the land and employ the people and collect revenue and do trading. Those operating subsidiaries are wholly owned by the U.S. parent. So we allow investors to invest through a U.S. structure, but get frictionless access to the business down in Colombia.
Got it. And I got to ask you some questions about Colombia. And please forgive me if these are incorrect or they're politically incorrect, but
Please.
I think as soon as I hear the word Colombia, a couple of red flags go up, right? One is that, I mean, and for the record, right now, you and I are talking in February of 2023, but I'm a little bit older. When I hear the word Colombia, I think of crime and drug cartels. But that was back in the 80s and 90s. How safe is Colombia today? How strong is the rule of law, and how safe is the business environment?
It's nothing like you would think, thinking of the 80s and the 90s and such. It's very much capitalistic and open for business. Medellin, the city, our hub in Colombia, it's a beautiful city with great shops, dining, high-end restaurants, wonderful experiences, a lot of innovation and investment happening there. Bogota, being the capital of the country, has a lot of multinational corporations working out of there. We're a member of CEA Colombia, which is the Council for American Enterprises doing business in the country. And there's other businesses, large businesses that are a member of that group that we sit at the same table at, and they do business there, like Coca-Cola, GE, Pfizer, Amazon. Large multinationals are on the ground and doing business in the same country as us. And we see investment happening on a global level flowing there. We've seen interest in foreign direct investment. The consumer is strong. It's the longest standing democracy in Latin America. And yeah, there's a Congress, and it runs in a manner that is on par with global standards, I would say. But it doesn't come without its issues, which mean, and just like even the U.S. in certain cases, right? And we see the climate being good for investment, particularly if you bring in dollars with the exchange rate currently. Right? The exchange rate of the Colombian peso per dollar 10 years ago was sub 2,000 to 1. Now it's hovering around 5,000 to 1, which means that investment going in, all else equal in dollars, buys more than twice as many assets as it did 10 years ago. And what's interesting about coffee is it's a global commodity that's traded in dollars. So you have this arbitrage-like opportunity where dollars can go in and buy substantially more productive assets that produce US dollar revenue if sold outside of Colombia. And then in terms of the climate and us operating there, the team, Cole Shepard, the founding partner at Legacy Group and GCC founder and board member, he's been living there 9 years on the ground. He's from the US originally, US trained, was a CPA, did international mergers and acquisitions throughout Asia and other parts of the world, found Colombia, fell in love with it, and saw that there was opportunities for arbitrage. First started in real estate and then founded GCC back in 2017, or Green Coffee Company back in 2017, initiated the next round, the first round, 1 year later. So, we've been on the ground there for some time. We understand the climate. You really need, it's not something that can be done from an office in New York. You really need to have relationships for these acquisitions, relationships in government, relationships in business, and the people we appoint to run the company. We have a 25-year veteran of Colombian agriculture as our CEO. He's an agro-industrial engineer by background. We have two senior advisors. One's the CEO of a publicly traded company in the US, Treehouse Foods. That's Steve Oakland. He oversees $4 billion a year in revenue. He's going down to Colombia to visit the farms and the management team in the coming days. So these things wouldn't be happening if it was that unsafe of an area to be living in. There's of course in any part of the world, in any country, even where I live in Fort Lauderdale, there's parts of the city I don't want to go to. So that stands true, of course, when you ask if a place is safe. But generally, for doing business, in terms of being democratic and open and capitalistic, Colombia checks those boxes.
That's wonderful to hear. Josh, a little bit more about coffee in general. And I think you alluded to it just a few minutes ago, that coffee is a commodity, right? And if coffee prices rise a little bit, then other countries get in the game. I think Vietnam is a perfect example. Back in the early 80s, Vietnam was really not producing any coffee, thereabouts. And now I think Vietnam is the world's second largest producer because they said, hey, look, we got land, it grows here, we can make money. And so it's a bit of a commodity. If the prices go up, more people flood in to push prices down through increased supply. Is coffee a good business long-term?
Absolutely, especially with the advent of higher inflation. The staples that investors tend to flock to and that they should flock to would be real estate and commodities. They typically are a hedge against inflation. But that doesn't always stand true. There's, of course, volatility in the market. We've seen coffee prices rise dramatically in the beginning years of COVID. They've tapered off quite a bit in the last number of months. So there's been volatility in the market. It's not just one smooth ride, of course, but we believe that commodities are a great place to be, particularly in this environment where growth is, we're a bit of in a niche because it's a growth company in the commodity space, but growth is being punished quite a bit nowadays in the market. So real assets, we believe, are a great hedge against inflation longer term. And in terms of, and also, in terms of smoothing out the volatility in pricing, the business model for us to get into roasted and into byproducts really smooths out the volatility that you would find in the commodity markets. If you notice, coffee prices have been wild, but the price of a cup of coffee at I don't want to name names, but at a cafe of your choice or in the grocery store doesn't change dramatically on a daily or monthly basis. If anything, it just seems like it's going up with inflation. So as you get into roasted and further down the value chain, it's more of a consumer product that will have a more, not fixed entirely, but a more fixed and stable price, and of course a higher price. So no matter what happens within the commodity markets, if you're selling a consumer product, you're going to make money if all the inputs and fixed costs are essentially the same, right? And then same holds true, or even more so for the byproduct. Creating revenue out of waste is a great business to be in, I would say.
Yeah, and I think you hit it right on you hit the nail on the head right there. The whole idea is, when you are in a commodity business, you always want to figure out ways that you can decommoditize yourself. That's why I'm happy to hear that you guys are getting into roasting, right? Because usually when I go to the store and I buy a bag of coffee, the name on the bag or the logo on the bag is the roaster, right? I'm buying either like Van Hoot coffee or Starbucks or Peet's coffee is big here on the West Coast, but it's the roaster that's on the bag, right? That's the way that you decommoditize coffee, is that you have a brand name roaster and you roast it with your own special formula and temperature and time and all that good stuff to have that unique flavor. And so I think that's the path you guys are going down yourself, correct?
Absolutely. That's exactly where we're going. We expect by the time we exit the business or a forecasted exit to phase entirely out of green coffee sales and go entirely into roasted sales and byproduct sales.
Makes sense. Makes a lot of sense. Tell me a little bit more about the byproduct. I believe that you have a plan to take some of the coffee byproducts, like from the growing phase, and make spirits or vodka out of it or something.
That's right. So I would love to show you a video on screen, but I know a lot of the people are probably just listening to the audio version of this. But in any event, I'll explain it here. So, at our wet mills, we take the coffee cherry, which is a fruit, down to a bean, and the bean is really the seed on the inside. So 75 to 85% is discarded, and it's the outside of the cherry, and it's kind of the skin and the pulp. And usually it's used as a fertilizer in a best case scenario. It's repurposed, or some of it is repurposed, or unfortunately, in many cases with other producers, it's discarded oftentimes in rivers, and it's not good to do so, of course, right? So looking kind of full circular economy and ways in which we could do well by the environment, but also create additional revenue and profitability, we started conducting research and development. So we worked with the University of Los Andes. It's a local university in Colombia, and there's been studies done globally that we've seen by other universities indicating the value of the coffee cherry cascara, is what it's called, or byproduct, and its properties to create other products, specifically ethanol is what we started looking at. So we found through research and development that we could in fact create ethanol from the cascara on our farms, and we saw that other producers, or not necessarily producers of coffee, but producers of vodka, have used cascara in order to do so. So vodka has already been sold from coffee cherry waste in the past. So it's something that's been done. So we saw all this waste at our facilities. We're talking hundreds of thousands of kilograms of waste, even on a daily basis at production, and we want to find ways to monetize it. So we had our test distillery arrive just a couple of weeks ago, as of the time of this recording, and we're going to be running small batches of ethanol through that to work out our recipes and our techniques. And then the goal is to build a full distillery at our wet mills or at our processing facility, so then we can create ethanol at scale, and ultimately then vodka, because vodka is ethanol and water, right? So with bottled vodka, we have capacity at our distillery, our planned distillery, to do 38,000 bottles of vodka per day from the coffee cherry waste that's coming off of the wet mill.
Yeah, very nice. That sounds really cool. So, Josh, tell me a little bit more, I guess, switching over to you. How did you get in this business? It sounds like it's a lot of fun. You go to Colombia several times a year. You get to basically be involved with a startup and see this company grow from a small one to this like billion-dollar company in a few years. How did you get in this business?
That's a great question. And I'm more grateful now that you're asking me the question. It is actually very cool, and it's a great thing to be a part of. And I love the work I do every day. It doesn't even feel like work. It's so much fun, right? Like the time we're recording this, most people would not want to work at this time, but I'm excited to talk about it, right? So I got into this from banking originally. Let me take a step back. Prior to that, I grew up in New Jersey, central New Jersey. Out of school, I went to Rutgers University, and I studied economics. I knew I wanted to work in finance. At first, I thought I wanted to be a trader on Wall Street. Turns out I didn't want to be a trader on Wall Street. I ended up working in insurance briefly, and then I pivoted to banking, and I worked at Wells Fargo and Wells Fargo Advisors as first as a junior banker, but then as a private banker, managing the relationships for high net worth individuals and business owners, and doing full balance sheet banking, really focusing more so on investments. So I got my Series 7 license, started working with securities, publicly traded securities. So servicing clients on ETFs, mutual funds, single stocks and bonds, kind of like the plain vanilla portfolio strategy. And then I was also helping with lending. So I had a background in residential real estate, knew a bit about commercial. So I would help clients at the bank with their lending needs to meet their investment purposes, like on their own. And then if they wanted some hand-holding and some help, we would do managed accounts for them, the financial advisor. And I kind of worked my way up the ranks and worked at Wells Fargo for 6 years. And I did that first in New Jersey, but I had a chance to come down to Miami back in 2018 now, and which about 5 years ago. And I did a lateral transfer, and I was a private banker in Miami Beach. So doing the same thing, servicing high net worth clients. And then I noticed my clients seemed to be living better lifestyles than me, and they were traveling all the time. They were investing in businesses, but not necessarily in private equity in certain cases, but a lot of them were entrepreneurial, real estate focused. And I wanted to wear shorts and walk around Miami Beach. I didn't want to sit in an office. I was looking, and I kind of got frustrated after 6 years of sitting in an office in a suit and seeing successful entrepreneurs. So I looked around me and I kind of started poking around, looking for opportunity for myself. Came across the two partners who I work with today. We were working at another venture, also in Colombia, and we were raising capital for real estate deals and helping clients, with alternative investments overseas in a U.S. structure. And then we were also working on the earlier rounds for Green Coffee Company at the time, and assisting Legacy Group with their capital raise through this other firm. So I had a great relationship, I'd say, with my president of the company, who is partner at Legacy Group and board member at Green Coffee Company. And he decided 2 years ago to divest from that other business, focus all of his time on Legacy Group and Green Coffee Company, which existed prior to that. Decided to give me the opportunity to come in and be the director of investor relations and really spearhead the capital raising and business development efforts of the asset manager. And in the last 20 months, we've increased invested capital or assets under management from under $10 million to north of $50 million today in less than 2 years. And we've done that through our Series B and Series C funding rounds. And we've grown the company to be the largest coffee producer in Colombia. I've witnessed it. I've been going down there for a few years now, and we take investors out, we do helicopter tours. I see facilities that we build with our capital and with investor capital, and it's been wonderful. But that's how I got into it. I guess you could say I stumbled into it, so to speak, and really just got linked up with some really intelligent guys, decided that they were doing great work, and stuck around and got brought into another opportunity, and here we are.
Congrats, Josh. It sounds like you've had quite the adventure so far. It sounds like you were doing some really good stuff, man. Congrats to you.
Thank you. I appreciate it.
Josh, as we move to wrap up this recording here, what's some advice that you would give somebody who is in their, let's say, mid to late 20s? They just landed their first full-time job. They have some money coming in. From a personal finance point of view, what kind of advice would you give them?
I would say you really need to think about, it's always about how much you got to have disposable income left to save and pay yourself first before you go and buy cars and take your buddies out to the bar. You get your first job, maybe it's a six-figure job, even in some cases, if you get your master's degree first. And then a lot of guys get roped into going out, having a good time, living a luxurious lifestyle, fast cars, nice clothes. And I love fast cars and nice clothes, don't get me wrong, but you need to save money from a young age and start investing. I think that discipline is very important for a young professional. So whether that's stuff like your 401k, if you get a job, set up that 401k and just set it and forget it, right? To the maximum that you could do without not eating, right? At least that's what I would say for someone who doesn't know how to invest it, right? If you're not going to be an active investor right out of college on your first job and find the next Tesla, right? Or find the next Ethereum 10 years prior to it going up. So just an aggressive saving strategy, whether you're saving into cash or a low cost ETF or into your 401k with the goal of buying your home. I think that's a really good wealth builder for young professionals who are looking to start investing, owning your home. Everyone needs a place to live. So if you're going to be paying rent, you might as well be paying your mortgage. And that's kind of my banker hat on. I understand there's a lot of tax benefits that go along with it as well. So that's really the escalator to wealth building that I've seen for young professionals and all investors. And everyone I spoke with as at the bank, as a private banker, owned real estate and invested in real estate. The exception is sometimes someone was like an entrepreneur and they like to rent. But almost every wealthy person I know is a real estate investor. So it's hard to become an investor right off the bat, but you could own your own home pretty easily with low cost financing. And I would recommend for anyone, save some money, 401k, low cost stocks or ETFs, buy your home. If you're in a position to do so, when you want to upgrade, don't sell it and buy another, and you'll be on your path to being independently wealthy, even with just that. Now, as you make more money, you could look at alternative investments, things like we're doing. This is particularly open to accredited investors. So people who work with us, they have $1 million net worths or they make 200K a year or more. So it's hard to get into investments like ours right out of the gate as a professional that's, hungry to make money and save and invest. I would start with the basics, work your way up, and then professionally, whatever it is that you do in any career that you're in, it's very important to be the best at what you do, and then focus on getting better at what you do every day. And even if it's something you don't love, and particularly if it's something you don't love, think about why you don't love it and find something that you do love so you can put in the passion and be the best at it, right? So I wouldn't be afraid as a young person to switch jobs. I don't think you should be. I see a lot of jumping around like every 10 months or every year. I wouldn't just do that. But if it's the right time, don't be afraid to move. Me personally, I like to stick around and let things evolve. So don't go into things like thinking like, oh, I'll try it out for 6 months and then I'll leave. Like, I don't mean to just try things, but don't be afraid to move if it makes sense for you. Then always spend time with people who are smarter than you, who are doing things you want to do. So whether it's real estate, investing, being a CEO, being a good dad, being a good friend, put yourself around people that you want to emulate, that you want to be like, and then they'll lift you up, right? You'll see that opportunities will present themselves, especially if you add value to those people. So seek out mentors, seek out people who are successful. Do an inventory on your friends and your relationships and really kind of think like, am I really getting value from this? Are they helping me take my career to the next level? So really map out your individual goals. Maybe it's not wealth building. Maybe it's, being a good son or whatever it is for you. And then do the actions that it takes to deliver on that goal. And every single day, one piece at a time. Like, it doesn't happen overnight. It happens over years. Same with the stats I'm giving you on the company. It sounds credible, like, oh my God, they raised $40 million. Like, we did it piece by piece, day by day, over several years, right? So whatever it is that you do, take that same approach, I would say.
Yeah, that's very well said, Josh. Thanks very much. As a data point, you work with a lot of accredited investors as you bring them on board. Just as a data point, what is the average age, would you say, of the accredited investors you work with?
I would say somewhere in the 40s to the 50s is like the typical client, the typical high net worth investor, but there are definitely exceptions to that. We have people in their late 20s who are invested with us, people in their early 30s that were successful in their own merit, whether it's real estate or entrepreneurship, and they're accredited, but typically 40s and 50s, often 60s in other cases. But
yeah, and I bring that up because you mentioned that it does take some time. It does take some time to build wealth and to get someone up to that level where they can be accredited. So, Josh, where can people reach out to you and find you?
Hey, you can find me on my website or on our website, Legacy Group. It's legacy-group.co. You can also send me an email at investor.relations@legacy-group.co.
Perfect. I will put that in the show notes. Josh Ziegelbaum from the Legacy Group. If you are interested in an alternative investment in coffee in Colombia, reach out to him. Josh, thank you very much for your time.
Thank you as well.